Hello, everyone. So we're back, and I hope you've made use of some of the networking opportunities by basically going to the different tables and double clicking. I moved around tables and I was able to meet one or two people, and we've had interesting conversations that would potentially lead to business. So that's a good thing. And I enjoin you all to also leverage the opportunity. Uh, I'll go straight into the next activity for the day, which is the panel session. And I'm extremely excited about this particular panel because we're discussing the role of fintech in post-COVID economic recovery. We've seen significant advancements in the sector, as earlier mentioned, as a result of COVID-19. And we believe there are more opportunities to take advantage of the potential that fintech holds to build back better. That's a mantra that we all keep talking about. And to do justice to this, I would invite the moderator for the session, Steve Gray, to come on board to basically introduce the rest of the panel. Steve works with the UK Export Finance and covers the West Africa region. So, Steve, over to you, and really looking forward to this.
Thank you very much, Lamy, and good morning, everybody. As we can see from the keynote address, fintech is delivering innovations in the financial and technology crossover space in Africa and disrupting some of the traditional financial services. Over the past year, fintech has continued to expand access to financial services during the pandemic, particularly in emerging markets, with strong growth in all types of digital financial services, according to a recent report from the World Bank. Fintech in the post-COVID economic recovery play, and what advancement have we seen in the past year given the challenges we've all experienced? This is what the panel today will discuss further. If I could invite the panel to come to the stage and introduce themselves, starting with Otto. Well, ladies first, Dora, if you would like to introduce yourself.
Thank you very much. Thank you, Mr. Steven. At first, I would like to thank you all for the invitation. I'm very pleased to be part of this very important event and to join this great panel. So I'm Dora Marak-Shirgaig. I'm the head of the Regulatory Sandbox and Innovation Lab at the Central Bank of Tunisia. And I was charged by the fintech field since 2018. To set up our roadmap and strategy to boost innovation in the financial sector. So thanks again. I'm very pleased to join you.
Thank you, Dora. And Melis, could you introduce yourself?
Hi, everybody. I'm Melis Carrara. I'm the Managing Director of the Catalyst Fund, which is an accelerator for early stage inclusive fintech companies across emerging markets. We are actually supported by FCDO, so the UK government, and JP Morgan Chase, and been operating for about 5 years across 14 markets globally. And I'm also actually a managing principal at DFA Global, which is a consulting firm specialized in tech data and finance for creating more equitable societies and solving development challenges, which is the organization actually powering the accelerator. So pleased to be with you all and looking forward to the discussion.
Thank you. And Otto.
Thanks, Stephen. Otto Williams. I head strategic partnerships, fintech, and ventures for Visa within our CEMEA region. And so when we refer to CEMEA, that would be Central Eastern Europe, Middle East, Africa. And, these are regions that we consider to be quite emerging. And this is a very relevant topic for a lot of the stuff that we're seeing across our markets. I look forward to, an exciting dialogue with this group, and thanks for having me on this event.
Thank you. And Pavle.
My name is Pavle. I'm the founder of Panave, and Panave is a tech fin as well as a fintech company in that we provide technology to service other fintechs, and then also have a fintech offering of our own in providing banking as a service, mostly in Europe. However, as of November, we entered the Latin American market, and as of 26th of December, we signed our first African customer. So we're super excited to be here. Thank you for hosting. Thank you for inviting me.
Great. And last but certainly by no means least, Teo.
Hi, Stephen. Thanks for having me here, and good to see Otto and others I know on the panel. So my name is Tayo Viosu, and I am the founder and CEO of Paga. Paga is building the Square ATM here in Nigeria, and we're solving two problems. One is the use of cash, and how do you digitize cash transactions, and how do you deliver financial services to the mass market in a country where 64% of people are unbanked, and 90% plus transactions are done in cash still. So very glad to be here.
Great. Well, thank you. So Terry, just picking up on the first question with yourselves, your services are well known in the consumer delivery, sending and receiving funds. But what are you seeing in terms of changing demands from the consumer, given the restrictions they have faced over the past year? And second part to that, what part of your model relying on agent networks? What are the challenges have you seen around continuing to build that agent network in the past year as well?
Yeah, thank you very much. I mean, like on the agent network, last year in Nigeria during the lockdowns, financial services were not considered essential services, unfortunately.
Can't hear Tayu. Sorry, Robin, do we have a problem on the platform?
We can hear you, Steve, but not Tayo.
Okay, Tayu. Okay.
I think Tayo might have some connectivity issues, and will be helpful if Tayo tries to reconnect.
Okay, I'll just move on to the next question, Terry, whilst we deal with the technical challenges. Mainly, at BFA Global, you're working very much in the consumer and small business space, providing research and advisory services. But how have you seen the sector adapt to the challenges, and what challenges have you seen with the regulatory environment keeping pace?
Great question, and a lot to unpack there. So when the pandemic hit, we actually were quite concerned. Like, as I said, we work actually with over 43 companies in our portfolio, all fintech companies operating in emerging markets. So in particular in Kenya, South Africa, Nigeria, India, and Mexico. So markets that were particularly vulnerable, where populations could be very vulnerable. And so we run actually a series of survey and research to understand the impact that the pandemic was having on micro and small businesses, as well as on consumers that were customers of our fintech startups. And what we found is that basically 80% of the MSMEs that we're serving were reporting large drops in income. Individuals were saying they had 5 to 6 weeks of savings left to live and spend, which obviously affected customer spending. And so obviously at the start, we felt there was a great pressure on revenue and margins for the fintech companies that we work with, and switched to cash conservation mode, having to do cost-cutting measures across the board, better cash flow management in general. And we're also concerned about funding availability. A lot of these companies are very early stage, they're pre-seed, and looking at, okay, are investors going to focus just on their portfolios, or are they will they continue to deploy capital at this point in time? And at the start, certainly there was concern, but what we found actually is that most of the fintech companies in our portfolio turned out to be very resilient, and found opportunities through the crisis to leveraging their agility, their adaptability, and the increase in digitization as well that was happening all over from consumers to respond and to offer value-added services to their customers. So we've seen, for instance, a trend of acceleration in terms of transition to digital operations via, like, for example, eKYC measures, like contactless payments. We've seen switching companies that were maybe more reliant on footprint and high touch sort of customer interaction, so actually switch more to digital strategies. So for instance, hyperlocal approaches using a mix of online and offline for customer registrations, more digital sales, more marketing processes that became digital. And I think actually it's probably an indicator, and love to hear what others think of how the pandemic could lead to permanent shifts really, in the way that these digital companies do acquisition strategy, marketing spend, etc. So overall, I'd say that we've seen a lot of adaptation, proactiveness in the response of fintech companies. For example, companies like SokoWatch in Kenya in our portfolio, Turako in Uganda that offers, for example, health insurtech products. And many of these companies have grown their transactions over this period.
Great, thank you. Theo, welcome back. Hopefully you're well connected again, but just going back to the question about the agent networks and the changing demands from the consumer in the past year in Nigeria. You're on mute at the moment. No. Theo, can you hear me? Okay, I think we still have some technical challenges there. Pavli, Panovate has a broad range of products from managed services and a launchpad for the businesses to make domestic and international payments. It was interesting to hear from Melis about the resilience that she has seen. But what are the key challenges that you have faced over the past year in delivering these services and remaining resilient as a business in the face of the pandemic?
I tell you, we had operational challenges because the pandemic, as I said, has forced some of the digital agenda. Things that people have been avoiding for a while have become front of mind, and actually in order to service your customers you needed to go digital and go digital quick. So speed of delivery became, and our biggest problem over the last year was recruiting more people. So it was actually staffing up internally in order to be able to deliver on the project. So that was a problem that we've seen. However, we run a relatively lean operation, so therefore it's a different model to some of the other fintechs that we've seen struggle because they were a lot more robust and suddenly there was a lot more competition. So for us, as I said, for our business, it was being able to answer the need because we saw a boom in demand. It was strange, we had sort of a really quiet period, April to sort of May, June, and then from June onwards it's been non-stop. And it looks like 2021 is going to be just as just as good as 2020, but it has made us reevaluate how we've been interacting with our customers up until this point, because COVID and this networking event has changed a lot of the preconceptions that we've had in terms of finding new markets and customers and things like that.
Yeah, no, indeed. And also Visa, clearly one of the very early entrants into the fintech space with the original credit card system back in the late 1950s. And it's reported that Visa processes in excess of 10 billion transactions a year. But given the volume of those transactions and the reliance on the limited number of data centers in the face of a global pandemic, have you seen the need to respond to greater resilience at the back office stance resulting from the challenges of COVID?
Stephen, thank you. Great question. I'd say, over 60 years ago when Visa was built, we were built for this moment. Starting out very early on to try and digitize cash and make those electronic. And I think with COVID, that's what it's all been about, right? How do we move to digital payments, cashless transactions, keep people healthy, can't really travel to purchase those goods cross-border via cash. And you've got to, make e-com purchases. And we've seen a pretty significant spike in online purchases, both domestic and international. And all of that stuff requires tremendous resilience. But not just resilience. Our network processes 65,000 transactions per second, and we've continued to have capacity to keep doing that. We're in 200 countries, support over 60 million merchants, and 3 billion plus card holders, and they all, are sitting in their homes and want to purchases online. And so you've got to be able to scale, you've got to be able to process those transactions, and you have to do it at the speed that the cardholder continues to expect, while at the same time innovating. Because at the point of sale, taking cash out of the system, how do you make sure contactless transactions are ubiquitous, merchants are enabled, and consumers can actually tap to pay without having to, handle cash, whether they're tapping with their cards or with their devices, and enabling the big tech and fintech ecosystem to drive those innovations and adoption. So it's been about resilience for us, and we've continued to harden our systems. Visa operates on a 5-9 basis, and so it's 99.999 uptime expectations on our network. But it's also been about cybersecurity and risk and fraud management, because a lot of the face-to-face card-present fraud that we've been seeing have now moved online. And so how do we bring AI to our network and machine learning? When you see that much data across so many countries, you've got really well-trained fraud models that can help spot anomalies very quickly, alert the cardholder via alerts, alert the issuer to take action, and inform merchants that that might be a fraudulent transaction before they go ahead to ship a $5,000 product overseas, right? So this is all of the stuff that needs to come together during this time, in addition to enabling those digital capabilities. Pay by link has become extremely important. We have merchants that don't have a website. You've got a lot of small businesses. They never had a site. You have to walk into the restaurant. How do you make a purchase? And what we've found that most of them doing, and thankfully we have a CyberSource platform, is they take the order by phone or by WhatsApp chat message, and they send the consumer a link, and you click on it, and you can complete that payment via link. Website, no app.
Oh, wow.
And you complete that, and they get the authorization, and they send your goods or your food out to you. And so pay by link has been enabled. Contactless, we've seen regulators drop the contactless, increase the contactless limits, so more cards and devices can tap to pay. E-commerce, making sure that works and that authorization rates stay up, whether you're shopping on a number of the sites. And Visa Direct. Now, this is really important, especially for Africa. It's UK Africa FinTech Summit. Remittances, foreign direct investment flows into Africa. You had to rely on physical agent locations. Paga knows this, Tayo knows this very well. He's been building that network out. But during COVID, they really couldn't operate, or consumers didn't even just want to go out to those agent locations. How do you make sure those funds terminate digitally into consumers' mobile money wallets, or to their Visa cards directly, or to their bank accounts? And that's exactly what we've been doing with Visa Direct, and most recently our Earthport acquisition to enable transfers, remittances, transfer to bank accounts, to Visa credentials, and eventually to mobile wallets as well. So lots going on, a lot of innovation. It's resilience, it's cybersecurity, fraud management, and its digital capability enablement for this new normal that we find ourselves in.
Great. Also, you touched on a very important part, and in terms of regulation, I'm delighted today that we actually have a regulator on the panel. All too often we don't. Dora, as a regulator, you have that unenviable role of ensuring that the sector is trustworthy, reliable, and at the same time seen as one of the key facilitators of a country's position in the global fintech space. Now, with the sector constantly innovating, as we've heard this morning, often far quicker than regulations can evolve and change, how have you as a regulator been able to respond to the changes you've seen in this last year?
Thank you very much, Stephen, for this great question. Actually, maybe I will not just talk about the impact of the crisis, because I think that with this pandemic, it's acting as a catalyst for us, as it confirmed our approach and strategies and the work that we have started since 2018 in order to develop and modernize the financial regulations. And with this pandemic, actually, we have felt the urgent need to move fast and move in the right direction. Maybe just to start, I wanted to specify that globally and theoretically, there are two approaches to deal with fintech. There is the government push approach, where public authorities, they anticipate, they put push fintech to develop their activities in this field. The second approach is the market pool, where actually the ecosystem, where it is very active, it pushes the authorities and regulators to react by putting in place the right regulatory framework to enable them to deploy their solutions. And actually in Tunisia, we have a very active community. We have actually very young people that they are really mastering new technologies and who are pushing the boundaries of the ecosystem. And for example, the startup community has actually pushed the government and successfully do so to issue the Startup Act, which is one of the very pioneering moves in Africa. And now we have in Tunisia more than 400 labelized startups that are got their labels. Also, in terms of talent, we have actually many engineers and Tunisian talents that are operating in Tunisia and across the whole world, since Tunisia has invested a lot in education and in ICT and is one of the main exporters of tech talent to the world. So today, with new programs, we are trying to keep those talent locally, and this is creating actually more jobs in tech sector and is creating a dynamic in the market. Also, even in terms of consumers, as population, Tunisians are among the most active people in the world on digital channels. And also, they are already digital consumers. So the consumers are ready. And with this pandemic, we saw a change in the behavior of the consumers. They understood very well the need to go digital, to get online transactions in order to meet their needs. So as regulator, we have started before the pandemic working on that, and we are aware of the urgent need to accelerate the digitization of the financial sector. Since 2016, the banking law has already actually introduced electronic money process as tools for payment means. And then the Central Bank of Tunisia has issued the circular dealing with payment institutions, which actually allow fintech to offer payment services at relatively very flexible conditions, and they gave them also even the possibility to use innovative technology to open remote accounts using the electronic Know Your Customer process, the EQIC. So today we have already 4 payment institutions that they got their licenses in Tunisia, and 3 others are under examination.
Wow.
Also, the Central Bank of Tunisia has contributed very well on the elaboration of the crowdfunding law, which will help them to raise funds. And the purpose and the main purpose of this this law is to provide the necessary financing for projects and companies in order to promote investment, promote entrepreneurship, creativity, and innovation, etc. Yeah. Despite actually the main role of regulator, since 2018, we are acting as a facilitator for the ecosystem. Actually, the Central Bank is now trying to help those innovators to deploy their solutions, to be confirmed with the regulatory requirements. So we have put in place the regulatory sandbox, which is a test environment to test new solutions and innovative solutions. And now we have already launched the first cohort with 4 talented and very important solutions dealing with cryptocurrencies, with digital payments, cross-border digital payments, EQIC, and crowdfunding.
Great. So I can imagine you never have a dull day with all those activities. Pablo, you had some views in terms of the challenges on the regulatory environment.
I had a question because what was spoken about before, we were talking about the unbanked and a large portion of the population being unbanked. One of the challenges is, how do you onboard an unbanked person? How do you KYC someone that, you know, remotely even? So what do you do, especially if those unbanked live in rural areas? They may not have access to the documentation that the regulator requires you in order to pass, in order to get some sort of, it doesn't have to be a bank account. It can be a prepaid card. You still need to go through some level of checks. So it was interesting, hearing Dora talk, especially, one of the, I guess as a provider, one of the services that we look at is how do we get to the consumer? How do we onboard the consumer onto the platform? And the first thing is to take them through AML, KYC checks, sort of verify that they say who they are who they say they are. So in this, when we're talking about the pandemic and forwarding the agenda, what we've seen is quick fixes. So things that are immediately solving a problem that the pandemic's created. But then there is a question of, well, I guess it is a question, how many of these solutions that have been born out of the need through COVID are going to remain in place? For example, virtual networking, is that going to be around once we go back to normal? Whereas other things that we've seen in the UK, addressing the needs of the vulnerable, how do you serve the vulnerable? And there are sort of a solution was created, but that solution should have been in place a while ago, because we've had vulnerable people in our country for a long time. It's only now that the problem became highlighted through the pandemic. So I think what we've seen is problems that have always existed being highlighted because they were exaggerated through the pandemic. And also, I guess my question for Dora is, to enter some market and to onboard in a time when you can't reach the end user, what are the mechanisms so that we can onboard them securely, so we can get them banked and get them interacting through the assistance of the regulator, because the regulator is the one imposing those checks, and rightly so. Don't get me wrong. I mean, we have to verify who gets to move money across, but I guess it's a question.
Great question. Dora.
Very much, Pavel. It's a great question. Actually, through the circular of payment institutions, we have introduced the requirements to offer an eKYC service to identify remotely clients. But today we are working on the framework of the regulatory sandbox with another fintech offering this service in order to standardize the process. Because we are, as you have mentioned, there are so many risks related to this activity, and as a regulator, we are very concerned about all measures to be put in place in order to protect consumers, protect consumers' data, and also all norms related to anti-money laundering and financial terrorism. So we are working on that through this test environment in order to standardize the process and put in place the right regulatory framework.
You see, and I think and I don't want to be hogging the time here, but it's really important for fintech companies such as ours, it's really important to have regulation and a regulator that's willing to help us deliver the services, because ultimately we rely on those things put in place by the regulator so we can deliver. You can have all the tech in the world, but if it's inapplicable to a certain market, it won't be any good. So knowing that regulators are taking active steps to ensure that the markets and regions are digital ready is super news, because it makes delivery of services easier, and it opens up the market to a lot more companies that can offer their program or service.
Even just to rebound, just a word. I'm totally okay with you. Actually, I think that the sandbox as a powerful tool will enable this dialogue between innovators and regulator, and that will make us put in place the right and appropriate regulatory framework without blocking the innovation. So it will be an interactive and proactive approach.
Great, thank you. So just changing the topic slightly, the UK government later this year is hosting COP26, bringing the world's leaders together to talk about climate change. And, one of the questions that's often asked is, how can fintech lean into this? Also, last year, I believe Visa was the first fintech company to issue a green bond. Are there any lessons learned from that experience that other fintechs on the continent can take away and lean more into the liquidity that's available in the green finance space?
Yeah, it's a great question. Actually, interesting that you picked up on that non-payment sounding, activity there, but it is very related to what we do. And our view on this is very simple. People and planet must thrive together. And, the way that we've been looking at people thriving, it's inclusion, financial inclusion. It's expanding access to small micro businesses who want to be able to increase their sales, gain access to working capital, which, by the way, fintechs are really helping to drive a lot of these through onboarding. The point Dora made earlier in that, probably picked up on, eKYC, for example, is such a transformative change. I mean, just policy refresh on this isn't, you don't have to move boulders to create significant change here. Simply eKYC, which means in order to open an account, you don't have to, require wet signature on paper that must be signed, stamped, and then walk into a bank branch to go and get delivered and verified. You can do it digitally. That alone onboards so many consumers to a digital payment experience, and also onboards merchants to a digital acceptance experience. And we've seen this across the board. It's how, players like Square have been successful in the US and many more across Europe. And you can't take that for granted. And so we've always advocated for this, driving financial inclusion and expanding access so people thrive in. But planet must also thrive. And so what we've done with this is, make sure that our operations are sustainable. And, we've been pursuing or transitioning to sustainable energy, renewable energy over the coming years. And this is part of it. And so with this bond that we've issued, what we're actually going to use it to do is continue to, transition our operations and the broader payments ecosystem to renewable energy sources. And, proud to say that we've made some really good progress there across a number of our offices, across a number of our data centers and operational facilities. We've really been able to move to renewable energy sources there. But, the regulator's role is critical here. One of the things that I say is, for fintechs to be successful, and I think this has been mentioned earlier, consumer demand is key. The consumer has to want the solution. But that exists, The financial service experience has been clunky for a really long time. Simple, convenient, accessible, that has always been a consumer need. You want to know what your balance is and see how you're doing toward your budget without having to go and scrape it off of a site and put it in an Excel spreadsheet, do the calculation yourself and plot a map. You've got a personal, financial management tool that can help you do that. The other element is technology. Across Africa, we've seen connectivity and mobile smartphones, and that's been very transformative. We've seen, platforms, cloud platforms like Amazon Web Services that have enabled fintechs to be able to go to market quickly with technology solutions. So technology has now come into play. The third element that's a really key to success and to the growth of fintechs here is regulatory change. We've seen that in markets where the regulator is progressive and they make some of these changes and they adopt interoperable standards, what happens next is, first, fintechs can actually take advantage of that to obtain the licenses that they need. Second, investors have more confidence because uncertainty is removed from that landscape. And so you find venture capital money also flows in to fund fintech growth, fintech expansion, and entrepreneurs to just continue to build those innovative solutions. So you've really got to bring these ingredients together. And so, just going back to that question, yes, we raised that bond to ensure that we continue to drive, the planet thrives as, while people are thriving, and we, transition our operational infrastructure to renewable power sources.
Great. Before I go to Dora, let me just open the question to Pavlo and perhaps Melis. What are you seeing as the opportunities and challenges on sustainability and greening fintech space?
Well, I can jump in. So if I actually completely agree with Otto. I think there's an opportunity. There's a lot of opportunities we are seeing actually on the product innovation side to come up with very targeted solutions that can help people not just switch to more sustainable practices. For example, what you were seeing in the pay-as-you-go space for renewable energy, whether it's solar panels or better use water meters, for example, better usage of water sources, but also on the climate adaptation side. So we've actually about to launch a program that looks exactly at the nexus of fintech and climate resilience for very vulnerable populations, such as, for example, farmers, fishermen, and also urban poor that are really, for example, affected by extreme weather conditions. And looking at where is the product innovation that can really help here. And I think there's a lot that we're seeing already from innovators, for example, in the weather index insurance space, where you're using satellite data, other sorts of data, soil data points in terms of soil quality, to inform automatic payouts of insurance, for example, for farmers. There's a lot of companies like World Cover in Ghana or Apollo Agriculture in Kenya that are doing this, and it's really at the forefront. And then you also have now innovations, for example, in aquaculture to help farmers diversify, for instance, the way that they farm and be more resilient to flooding. There's also marketplaces for fishers where you're helping them do more sustainable fishing, but also take the catch and deliver it directly to restaurants, avoiding the middleman. A company in our portfolio called Abalobi does this, and at the same time also provides insurance and payment solutions and credit in the future to the fishermen. So I think the range of possibilities is really wide in that spectrum, from adaptation to obviously mitigation solutions around renewables or mitigation of pollution. And it's for players like ourselves, like a Visa, in terms of also partnerships, or ourselves as an accelerator and an investor, to look for those as we need to all focus really on the climate crisis.
Great.
It's, it's funny, Otto mentioned Amazon, and I was just thinking how with, I'm driving less these days, but I'm rinsing Amazon so hard that I don't know what I'm going to do with all the cardboard that's coming through my door. So I don't know how green I'm being, because, I'm having my recycling bin is taking a hammering. So it's, every sort of action that we take also has, something opposite that happens. So I think, green is measurable, but I think what fintech, at least from our point of view, what we are now able to do, and going back to something Otto said, regulation, and I would just like to point out to sort of Europe's PSD2, sort of open banking and various other things that I think is going to change the way Europe sort of deals with banks. And I think it's, I'm really into it. We as a business are, but I think what we can do is provide our users, based on what we do as Panovate, with additional information that we can help aggregate from every single spending source to sort of make them aware of what their sort of ecological footprint is based on their behavior. So I think what you can do is you can inform the user about their own behavior, and then possibly look at how those can be changed. Rather than, help out direct businesses, it's not something that we do, but what we can certainly do is collate the information from every single spending source in Europe, and with the user's permission, and allow them to make some, life choices. Because you can say, hey, you know what, the way you're living now, or the way you're shopping, where you're shopping is having this sort of impact. And I think if you can provide, this is a personal opinion, if you can provide an alternative that doesn't alter their life, they will do it. Or doesn't alter their life to a great extent, everyone will make that switch.
Yeah, yeah, no, indeed. And Dory, we're hearing a lot in the responses here. It's the regulators. What is the thinking in the regulatory space at the moment around climate adaptation and green finance?
Thank you, Stephen. Very good question, actually. And I totally agree with what have been said. Actually, indeed, fintech are part of the sustainable financial must converge on, as the strategy is part of the United Nations Sustainable Development Goals. So here, and since fintech are actually, even for us, could play a major role in financial inclusion by offering small businesses, small credits, also platforms, even for green crowdfunding. So actually they play a key role in developing inclusive green finance. And since those small businesses will be offering a small service, so they will be actually subject to relatively flexible requirements. And this is the risk, actually. This is the main risk, because here fintech can be used as a greenwashing channel. And when consider us as a service which is serving a good cause, or like socially responsible investment, etc. Actually, it could be involved in greenwashing businesses. And for us as a regulator, this is considered as a practice of financial misleading and money laundering, and we are very concerned about that. But from a regulator perspective, I think there are two ways to deal with those risks. The first approach is to submit fintech to a strict regulation. However, this approach actually may hinder innovation, may block innovation, and may turn out to be also very costly for us as a regulator. The first approach is to adopt actually a flexible approach that keeps the market going, and like Pavel said, keeps consumers very aware about the potential risks. And then our role is to react when we saw, or when we see that there are many overruns in terms of misleading ads, misleading the public, etc. But here at the stage in Tunisia, we have not yet actually elaborated our strategy for green finance. So I think the first task to start with is to work on the taxonomy, to define what could be considered as green. And only even in the world, few countries have already worked on that, and it's mainly the European Union and China who have already worked on this task. But as regulators, we are very concerned about that, and even fintech, when they will be integrated this field, they will be subject to regulatory requirements.
Thank you very much, Dora. Anybody want to come back on Dora's comments? No? Okay, great. Well, thanks for that very detailed response. Yeah, we've heard there's been a lot of challenges in the last year. We've seen there's been a lot of growth. But as we look ahead, in the post-pandemic life, if there is going to be one, what will be the new opportunities and what will be the new value-added services that will be introduced to customers, or customers are demanding? Otto, Melis, one for you.
Okay. I can jump in first here. I'll be brief. So we actually see a lot of opportunities, and it's been really said in this panel already that there's been a lot of growth this year and an acceleration of digitization and demand from customers and MSMEs as well. So I think it abounds, and it's across, right? And so for us, where our focus is, again, Africa and underbanked, underserved customers, we see primarily 3 product areas and one general trend. The general trend is actually the embedded finance trend. So we see a lot of our startups right now, actually latest cohort announced a few days ago, basically thinking more innovatively about distribution channels. So how may we embed a financial product into another service in another adjacent sector, be it digital commerce or something else, in order to reach the end customers through a familiar touch point that can increase usage and adoption of that financial service. And so some of the companies, for example, in InsurTech, are now building APIs that can be that in infrastructure layers. And as I think previously we heard in past also talking about that, really moving sort of to FinTech 3.0, connecting traditional insurer with, for example, a Safe Boda or a company that is a tech platform that actually has another purpose but could distribute that insurance product for their drivers, for instance, right? And we've seen that also in the savings and investment space. So APIs now for savings, again, connecting banks to a distribution partner via tech platforms, as well as the credit. I mean, the credit space is, I think, that's most of the proof points to date. And the three areas that I think we're most excited about are micro savings and investments, like companies like Carrywise, even what Paga or PiggyVest in Nigeria are doing. It's extremely interesting to us because we're seeing actually a lot of adoption through the young populations, like young Nigerians saving through those apps, because the trust is actually greater in those versus a traditional bank. And I think that trend will increase. The second one is InsurTech. So the diversification really in insurance, like still 3% penetration in insurance in Africa. I mean, there's so much work to do. And in the health space, in the life insurance, but even micro, we call it sort of micro insurances for, say, car rides, or like specific product purchases on e-commerce platforms. Like there's really a lot that can be done. And then the third area is what I call the MSME digital stack. So digitizing the micro and small businesses so they can leverage digital commerce more. And if there's another pandemic, they actually be better prepared to reach our customers digitally and sell digitally, and also service their own value chain, so via their own distributors and partner producers.
Okay, great. And also,
thank you, Stephen. We see, first of all, baseline digitization that's going to scale more broadly. The merchants have to be able to accept digitally everywhere and anywhere. Consumers want to continue that experience because it's better and they prefer it. And regulators want to make sure that their markets are now ready for the next pandemic or for such situations. And so what you'll find is just that baseline architecture will continue to scale, and there are fintechs providing that service. And that again is where Visa plays. By being in 200 countries, by having a global infrastructure that is standardized, that means that any fintech that's connected to any one of our services or solutions can scale to many more markets without having to rebuild a new stack. And that is exactly where certain regulators will be successful. Regulators that adopt standards and interoperability will see success, because no fintech really wants to build a new stack for your market if they can expand into 7 additional markets with the same stack by being connected to a global network. And so that's going to be critical. I think that expansion and that scale, which is going to be driven by standards, whether it's standardization around QR codes, it's standardization around contactless payments, and consumers want this too, right? They want consistency. If I go on a website and I make a payment, I want to be able to do it the same way across 12 other websites and not, because it's payments, it's sensitive. If you go to a terminal and you tap your card a certain way to pay, you want to make sure that every other terminal you go to, it's the same experience and not, wait a minute, how come I had to do it a little differently? Where is my money going? But merchants also want that too, because guess what's just happened? That merchant has handed you a $3,000 television set to walk away with, hoping and expecting that they're going to get paid overnight. And that money needs to be there. And so consistency is key. And that's where standards come in. And that's what we've been doing, making sure that once that approved sign shows up on the terminal or on the site, consumer feels secure, merchant feels secure. What we're also going to be seeing is credit. Credit is going to it's starting to take on a new form. We always knew credit as it's what the bank extends a loan to you. It either sits on your credit card or it sits in your loan account, but it's also buy now, pay later today, right? I mean, you go to a site, you go to a store, you buy, you pay later. You've got a number of those solutions. It's also installment solutions, and we've got a Visa installment platform that enables this for multiple sites and for various banks. Credit is instantly reading the data on your phone and extending microloans to you. It is using alternative data that the merchant has access to where they don't have a formal credit bureau to be able to give them working capital or to make their supplier payments for them in form of credit. And so you're seeing credit being redefined in so many different ways. We're going to continue to see that because there will be demand for liquidity coming out of this period. And we'll see a lot of creative solutions that power that. And once again, Visa will continue to provide infrastructure and skill for fintechs to be able to go to multiple markets, access, data that they can action on, and gain access to banks. We've got 16,000 banks on our network that can either provide liquidity or bring a consumer base. And the third trend that we'll definitely see is banks moving into this next phase of digital. And so, prior to now, it was either the fintechs or the banks. Frankly, the banks have really not had an option with COVID. You've got to go digital. You can't open branches, right? Your merchants want to accept digital. Your consumers want an app that's not clunky because that's their only interaction point. And so digital is now a must, and banks will now begin to move into this fintech phase, whether it means standing up, platforms on the side or, just revamping their existing infrastructure. So we're going to see some really exciting stuff there. It may lead to consolidations. It may lead to acquisitions. It may lead to, collaborations with the more digital fintech players. But it's going to be a very exciting, next few years in the space.
I completely agree because I was trying to take mental notes. I'm holding my laptop and I have nothing to write with, but which is like so many things that I wanted to mention. I think banks have taken the right steps earlier on. They should have sort of moved digital, but what we're seeing in the UK now is online platforms buying traditional brick and mortar shops because the high street refused to change decades ago. So I have no sympathy for the high street as well because they flat out refuse to go along with changing consumer habits. And now what they're seeing is that online shops are buying them up, and killing off, and remaining. I think the key, what we're seeing is for a merchant, there's, what Otto mentioned, and there's this key moment of make sure that the transaction is secure. However, don't introduce any additional friction to the purchase experience. Because one of the biggest pain points that you have as an online merchant is that basket dropout. If my payment experience, because you're looking at, it's not just payment, it's the entire shopping experience. If it's hard to pay at the end, I'm going to walk away unless I desperately need the product. And if you go to some sites where it's easier and then some sites where it's more difficult, you're probably going to go to the ones that are easier, hoping that their database doesn't get breached and your data doesn't get sold, somewhere else, which also happens to much bigger, people associate risk with smaller merchants, which isn't always the case. Smaller merchants sometimes invest more in their infrastructure than the likes of BA or the big guys that have those database breaches because I think, they're running on a few legacy things. So I think what we're going to be seeing is a lot more AI-led or machine learning sort of security that does, as Otto mentioned, look at the way you're interacting with your phone. And we're seeing this in sort of transaction monitoring is looking at how you're interacting with your device and understanding that it's you using the device rather than a fraudster because you're holding it a certain way, you're typing buttons a certain way. So it is sort of a stealth protection, so to speak, so that my purchase experience is seamless. However, I've done all of these checks in the background to ensure for the merchant or whoever to ensure that I am actually Pavle that's using my own device with device security and everything else. And just one quick point is to say, we talked about trust and people trusting things. And I think that's where Visa have such a, unique position because people trust that Visa brand. I may not recognize the bank on the card, but if I see the Visa brand and it sort of goes through the terminal, I have trust in that. And that's sort of a key thing when it comes to new things and where partnerships with existing sort of institution becomes really helpful for fintechs is because you get the trust aspect of the big brand, and you possibly get the innovation that you are sort of unique for, that enables specific things. So I think lots of exciting things. One final point, and then I promise I will go put myself on mute. Credit is the next frontier, 100%. We've seen consumer, we've seen sort of SME, but credit, yeah, there's going to be a lot of fun to be had in credit.
But Pablo, just on credit, for me, with UK Export Finance as the UK government's export credit agency, we're dealing with trade finance. And let me just sort of move the discussion from consumer to trade finance side in the fintech space for a moment. Chambers of Commerce estimate that there's about $9 trillion a year done in trade finance, but non-financial institutions and fintech providers are only providing 3% of this volume before the pandemic. Why is that, and what needs to change for the fintechs to lean more into that massive market of trade finance?
Interesting. Sorry, was that a general question or a question to me?
No, it was a question. It was a question for you.
Oh, okay.
Sorry.
Oh, I think it's difficult because a lot of, I think a lot of trade finance is, I think it's a more, maybe, and this is, I'm only speaking from our point of view, it's a harder bridge to cross than getting into consumer or sort of SME space. Because when I think of trade finance, I think of letter of credit, and I think of sort of some of the technologies that could be used like blockchain to get some of the bureaucracy. I think there's, rather than user experience and change in consumer habits, there hasn't been that shift in buying behavior or user behavior as much in trade finance. So things have progressed to go the same way because speed isn't as much of a factor, or convenience isn't as much of a factor as it is in other aspects of sort of the payments related thing. And as I said, when I think of trade finance, the thing that comes to my mind is letters of credit. And, a key technology, it would be blockchain to solve some of the problems. But to be honest, for the banks that work in trade finance to accept blockchain solutions seems so far down the road that I'm not gonna spend time trying to convince them now. I'd rather wait for someone else to do the education, make the investment, and then I'll come in as a fast follow to try and sort of embed some things into already ironed out market. I think you look at points of entry and how quickly you can solve particular problems within your skill set that your organization have. And I just think trade finance, while the volume is good, I'm failing to see, which is not to say that it doesn't exist, the real pain points that I can solve with the technology that I have today, or solutions that I have today. That's why I think it's just a harder barrier.
Okay, so barriers are normally created by regulatory environments, and Dora, we have the AFCTFA that was launched this year, looking to increase trade across the continents. From a regulatory perspective, where do you see the fintech regulatory space going in terms of supporting the AFCTFA's aspirations for more intra-Africa trade?
Thank you, Stephen. I think actually, like Pablo said, the use of blockchain technology, smart contracts, in concluding contracts will play a key role in developing these activities. As a regulator, we were working to enable this environment by publishing recently the circular on mobile payments, which can be considered as a great tool or an instrument to facilitate trade finance. The circular was published on May 2020, and it gives the banks and payment institutions, the Tunisian Post, the possibility to commercialize mobile wallets by defining the terms and requirements for the interoperabilities of payment systems and consumer protection. And as Otto says, the interoperability here is a key element to guarantee the success of the process. That's why even through and after this, during this pandemic, CBT was working with other authorities in a great way, with a great coordination actually, to eliminate all barriers and to put in place the dedicated and the appropriate framework. So we have, the CBT has also concluded a memorandum of understanding with the Ministry of Technology in order to also supervise the activity of the post, since it is under the authority of the Ministry of Technologies, in order to enable the interoperability between the payment infrastructures actors in Tunisia. And what was actually very interesting is the coordination and the way we have worked together during this crisis. Actually, it was a great coordination, an agile mode, very smooth and very quick delivery.
Very good, very good. Just recognizing time, one final question for each of you. In one sentence, what's your vision for FinTech in 5 years' time? Melis.
The vision is, I think, that FinTech will eat the world, in the sense that potentially every company will be a FinTech company as a lot of these solutions become embedded across sectors. And I hope that that will drive a lot of inclusion and usage of products that are adapted to the or previously unbanked, because access alone is not sufficient. You need to actually design products that meet the end customer needs.
Great. Pavle, same question. You're on mute.
It's rather annoying that Bailey's got to say, exactly what I was hoping to say, and now I'm like, I'm going to be stealing ideas. I think finance is going to become embedded part of life, and I think what you're going to be doing is you're going to get to a situation where you walk onto a forecourt of a dealer just to have a look at the car, and you get a message from your bank saying, hey, you're thinking about buying a car, you've got 50 grand to spend because in your base history, go shopping type of thing. It's going to become a seamless experience, not something you go to that you have to search for.
Mm-hmm. And Dora, same question for you.
Actually, I think through this crisis, can you hear me?
Yeah, we can hear you.
Okay, great. So I was saying that this crisis actually is a great opportunity. The pace of digitization is accelerating. I think that banks should free themselves from the constraints of their classic business models in order to be able to reinvent themselves, and they need actually to move and to work in partnership with the fintech operators. Also, I think that there are many projects that could be actually could need the help and could need the assistance of innovators who master the new technologies. As regulators, we will be launching initiatives in order to facilitate open innovation in an interactive way with innovators. So also, I think that we stay and we stay very vigilant about risks also. So we will be very vigilant to ensure that the use of the new technologies is in the secure way in order to protect consumers, protect data, and also be sure that all norms related to illicit finance are respected.
Great, thank you very much. Ladies and gentlemen, it's been a wonderful hour. I hope you've enjoyed this discussion, and I'd encourage you to put any questions that you may have in the Q&A section for the panel to respond to.
Yes, thank you very much, Steve, and this has been really insightful. I see a couple of questions here, so I'll just read it out to any of you to respond to them. One I see that's been really upvoted is who defines the rules and regulations for the whole African continent for banking? Who is the oversight regulatory body?
I think that one's for Dora.
Dora?
Okay, so I think in terms of regulations, today all regulators are concerned about the challenges and the huge opportunities offered by fintech. So I think that the key word is more of coordination and collaboration between all authorities in the region in order to put in place the more efficient regulatory framework.
I totally.
So coordination and collaboration is the key.
Yeah, I totally agree with you, and to a bit more to that. So there is not one body that essentially provides oversight for the entire continent, but it's more country-specific bodies, and usually it's the central banks of most of the bodies of the countries that take responsibility. So it's not one entity that basically regulates the entire African banking sector, but it's a coordination of efforts from separate central banks across. I see another interesting one, which is how do we protect the African consumer as this great rush to bank and service the great unbanked gets underway with little or no conduct risk legislation. So,
Pavle, do you want to take that question?
I've just looked back in. I didn't hear the question.
I think that.
Okay. Go ahead, Dora.
Yeah, actually, consumer protection is a big concern, and as a regulator, we are very concerned about that. We have dedicated units dealing with problems faced by consumers and trying to deal all these facts. And I think that even while putting in place or elaborating new regulations, we are very vigilant regarding the protection of consumers in terms of data, in terms of even the capital of consumers, or while ensuring transactions, etc. So, as a regulator, we are very concerned about that, and I think that a lot of work must be done in terms of educating more consumers about the potential risks of financial services.
thank you. Pavle, I'll just very quickly repeat the question again in case you want to address it as well. So basically it's saying, how do we protect the consumer? So there's this rush to bank the unbanked in Africa, and a lot of fintechs are springing up both locally and offshore, and there's little to no conduct risk legislation. So the question is, how do we protect the customer?
Well, I think this is sort of Dora's domain, but it is crucial that we run as many extensive checks on the fintechs as possible before they're even allowed to play in the market. I think in order to be allowed to get to the customer, they need to be verified, and they need to be sort of in a position where they can be held accountable. So then that doesn't happen. But I think, again, from our point of view, I've got to be careful because we're a fintech. And I'm also sort of seeing another question that has been popping up regarding the risk-based approach. So I'm eager to get to that because that's where my head is at. I'm really sorry, Lamy. I think it's important to, like with, it's important to verify for the not just the regulator and anyone else, because in Europe not all fintechs are regulated. You can work under umbrella agreements, so it doesn't need to be. It's not just the fintech that's regulated. It's actually the fintech regulates one party, and then that party's obligation must be to verify anyone working under their permissions, so to speak. whatever they get from the regulator. So I think it's, you know, ensuring that everyone is adhering to their obligation, which our law is the key to protecting ultimately the customer, whether they're banked or unbanked. You know.
Awesome, thanks. So let's go to the one that you're keen on, which is directed to you. Change approach, focus on using a risk-based AML to make it more relevant to Africa. So I think probably it's how do you change your approach to having a more risk-based model to solve some of the issues you raised earlier?
Well, I think, and again, the problem that I don't have a problem with the unbanked. The idea is, how do you, one thing is saying we can put KYC in place, great, but if that person has no documents, no way of verifying, how do you onboard them in the first place? KYC isn't going to solve a problem if you're pinging a person that's not showing up in a database. I think taking a risk-based approach to onboarding is the right way to go if we're thinking about the unbanked, because you do need to have a starting point, whatever that is. So, make sure they get onboarded, but then put limits in place so they can't abuse the system, whatever those limits are. But we need to take these people from being unbanked to being in a position. The idea is to take someone that's not had a bank account to having a bank account and being able to build up a credit report so that they can get a mortgage later down the line. So I think, as far as we're concerned, I think taking a risk-based approach on everything is the right way to go to reach these people in the first place. But it has to be properly sort of regulated and properly thought out. And it has to be sort of slow baby steps from making sure they can get on the ladder and then taking them through. That's I think that risk-based is the right way, the right approach in order to get to the populace, if we want to get them onboarded and want to get them into the digital the digital payments space.
Thank you very much for that. I think, Steve, you could push this one as well to one of the panelists. Does the payment service platform need a credit institution license to offer pay later functionality? I think that would be market based, but it's more of Dora space though. Dora, did you hear that? So the question is, does a payment service platform need a credit institution license to offer the buy now, pay later functionality? I think that was the functionality Otto was describing earlier on.
Yes, absolutely. Actually, it needs to get the agreement to operate as an institution payment institutions.
Okay, and this is expected to be the same across other jurisdictions as well. I know, yes, your jurisdiction is Tunisia, but from your interactions with other regulators, you reckon that's what it will be?
I think
Absolutely.
all European-based buy now, pay later are credit institutions. You can't really give credit without having the right credit licenses anywhere in the world that I'm aware of.
Awesome. I think this is one interesting bit, and it basically says, how do you incorporate fintech in conflict-affected areas across the continent? Pavli, that might be you.
Oh, thank you. That's an easy one to answer. I think it, fintech goes where it where it can. I honestly, I think I would need to think about it a little bit more to give a proper answer to such a complex question. I really don't know. I'm holding my hands up. I don't have an answer or a comment right now.
Honest response, and I think we'll leave it at that. A final one before we move on today will be this was one to Melis, but Melis has dropped off. But I think we could just very quickly respond to it before we move on. And it's about the insurtech penetration being at 3%, and basically asking how we what the panelists think is the major issue around the adoption of insurtech.
I would venture a guess. I really don't know the specifics of, with regard to the African market and why it's at such a low level, but it's to do with, I would venture a guess into how developed the insurance business is for sort of opening it up to consumption by others, so that in order to get insurtech, you'd need to be able to provide services such as in the UK, Go Compare, or sort of access those insurance services and bundle them up and put them into other services in order to really sort of exploit the way insurance is done. And if that there isn't the plumbing or the willingness from the insurance market to go that way, because when you start aggregating, the aggregator becomes the customer facing brand, and you are just a supplier, one of many that the customer may not care about, and that's something the insurance companies are going to be precious about. So if that doesn't exist, you are not going to create you're not going to have an environment to really introduce insurtech. But again, insurtech is not something that, as I say, especially not in the African market, that that I know of with particular detail. So that would be my guess.
So let me just come in on that. In my discussions with the insurance companies in the last year, it's been about the regulatory environment. The regulators in the insurance space are not as keyed into the insurtech space in the same way as the central banks are with the fintech space, and some of the issues around KYC and onboarding customers through the insurance process. That's been one of the key insurance companies have faced. But I think this comes to the end of the Q&A session now, Lamy, and I would just like to thank everybody for dialing in on this, and in particular thank you to all the panelists, Pavle and the others. I know we've had some technical challenges, but look forward to ongoing engagements, and if there's any pressing questions that need to be responded afterwards, I'm sure, Lamy, if you can share them with us, we can get back individually.
Thank you for having us.
Yeah, thank you.
Thank you.
Thank you. We'll move straight into a 15-minute break, and use the break to grab a coffee, grab a drink, but also, very importantly, use the break to network. So pop into different rooms by double-clicking on the tables, and turn on your cameras, which will be down of your computer. Click on your cameras, click on your mics, and get conversations going. I see a lot of chat going on, and I see people already networking on the chat functionality, but also use the networking tools available on the platform. You could also move between rooms, so you could go one floor up or one floor down as you wish. So see you guys in 15 minutes. This is getting exciting. Thank you.